Hi, everyone. I'm Gary Brode from Deep Knowledge Investing. We work with hedge funds, family offices, registered investment advisors, and individuals like you to help people get better returns in the stock market. One of the big themes in investing in the last couple of years has been in energy. We are here with one of the world's foremost energy experts. Mark Rossano is the CEO and founder of C6 Capital. He is an expert in traditional carbon-based energy, in pipelines, in green and alternative energy, and also knows an enormous amount about food and fertilizer, because these things are, of course, all related to energy. So this is the topic of the day. Mark, thank you so much. So glad to have you. Welcome.
Well, it's a pleasure to be here. Thanks for asking me to join.
Yeah, terrific. All right, so let's start with the easy stuff, geopolitics, right? Obviously, there have been a huge amount of concern based on what's happened for the last 2 years in Ukraine and Russia. That concern, and again, related to oil and natural gas prices. And then that concern has been magnified due to events between Israel and Hamas. And, there were basically the Wall Street Journal said Iran is threatening to close the straits, which would cut off something close to 30% of the world's oil supply. But strangely enough, Mark, even though we've had these really impactful geopolitical events, the price of oil has not gone up. It hasn't skyrocketed as so many expected. I'll be honest. Had you told me 2 years ago we're going to have a war in Russia or around Russia, and then another one in the Middle East, I would have said, we could be looking at oil prices somewhere between $150 and $200 a barrel, and instead they've come down. So what did we all get wrong?
So when you look at geopolitical, I don't want to call it noise because it's actually happening, but the geopolitics always fades especially when you look at what is in the market, because the market becomes the prices it in, then it gets numb to it, and then it slowly discounts it as things progress and it doesn't escalate. So there always has to be an escalation point in order to maintain the momentum of geopolitical risk moving into the crude markets. You're also seeing it happen at on the backdrop of a weakening economic footprint. So when you look at rates going higher, inflation still staying elevated, manufacturing already in contraction on a global basis based on PMI, based on global trade, and then the consumer slowly whittling down and finally starting to fall into contraction. Europe is already well into a recession. The US is kind of on that cusp, where when you look at China and India, they're slowing. We don't think that they're going to enter into a recession, but again, they're still not really driving or absorbing what is being missed in the market. The other issue is the West African markets, and the problem there's just not the level of demand that people were expecting. And you continue to see that with, I was actually pulling it up while you were doing the introductions, where right now, when you look at the physical markets, you're seeing price reductions. Now, Saudi Arabia is starting to get more aggressive in terms of cutting their prices, while trying to go back and forth on, do they cut more? Do they just stay the course because people are cheating? And I think that puts it into perspective, because I think you highlighted it beautifully. It's like you have all this geopolitical risk. First, you had Russia, Ukraine. Then you had Israel, Hamas. Then you had, Iran threats. And yet we still have almost 3 million barrels a day of supply off the market, and you still can't get the crude prices higher. And I think it really is indicative of the fact that if we did have those extra, let's call it even 1.5 million barrels a day of supply, crude would be $10 lower. I mean, we're here because of the crude cuts, not because of the geopolitical issues that continue to circle the headlines.
All right, so let's go back to what you were saying a minute ago, because I think the key point you were making is that a weaker economic footprint can reduce demand for oil, or energy. but is worldwide energy demand actually down? Granted, the world economy isn't in great shape, and deep knowledge investing, I've been crystal clear saying to people that 5% GDP print that we just had for the third quarter was manufactured. It's not real. These government numbers aren't real. Our economy is not really growing 5%. We have massive amounts of government spending that's not really creating value. But let's go back to the real fundamentals, right? Recessions, not recessions, weaker economy, fine. But is worldwide energy demand actually down?
So global demand for energy is not down, it's changed. And I think that's where whenever people talk about 100 million barrels a day of demand, everyone just automatically thinks, well, it's oil demand, 100 million barrels of oil demand. It's like, but it's not. Only 60% of that is black oil, is crude oil. The rest is liquids. And when you look at liquid demand, when you look at LPG, the liquefied petroleum gas, mostly made up of propane and butane. When you look at LNG demand, liquefied natural gas, and to be fair, when you look at coal demand, those are all going up, which is helping to, let's just say, tamp down some of that underlying black oil demand. There's also the backdrop between what is a mobility fuel and then what is an industrial fuel. When you look at gasoline, gasoline demand has been weaker because in the US, we've become more efficient in terms of our engines. Our roads are a bit more efficient with that, flexible work schedule. You're not seeing the same. So even though, and because people will talk about the Department of Transportation, be like, well, miles are up. It's like, yes, they're up, but they're more efficient. There's less bottlenecks. The engines are newer. So you're getting a very different type of driving experience, which is actually a more efficient one. So you're consuming less gasoline to achieve the same amount of miles. Then you go into other areas and you're seeing additional slowdowns, especially in Asia, Southeast Asia, as well as China. But then when you shift to the industrial side, I mean, trade is down 6%. When you look at manufacturing is deep in contraction. Even in the strongest countries, it's on a weak footing. And on a global basis, if you just use the product manager index, or the PMI, we're at just above 48, which anything below 50, you're in contraction. So, but you're not in collapse. It's not like the PMIs are printing in the mid 30s. It's something where you're kind of bumping along in this stagflationary footprint. And then you turn over to Europe, where you're seeing things degrade. And now in the US, we've started to have regional Fed data come out, Dallas, New York, Philly, and they're all printing well below expectations into deeper negative numbers, showing that, again, the trend is moving in the wrong direction. And because that trend is moving in the wrong direction, you're seeing more refined products left in the market. And everyone likes to confuse things. It's like, it's all about oil. It's like, well, there's a supply chain. And if you look at the actual refined products, total oil product stockpiles around the world is at a record high. And I think sometimes that gets lost on people when they're like, well, look at Cushing, or look at, it's like, well, let's look globally. And you could actually see that crude stockpiles have gone up. We're back into surplus because of so much floating storage. We're actually above the 5-year rolling average. When you look at total oil product stockpiles, we're higher and rising, because we're coming not only into a seasonally weak period, which is into December into Q1, but then you also have the pain that the consumer is experiencing. And that's really the last shoe to drop, because on an industrial basis, we've already been in a fairly broad slowdown, if not, softer recession on an industrial manufacturing basis.
Actually, let's go back on one of the key things you were talking about, because consumer pain, what they're dealing with. So I'm actually in Manila right now, in the Philippines. But before I left, I went to go fill up my car. I live in Connecticut, and premium gas there is still pretty close to $5. So I think the answer is going to be crack spreads. I think that's where you're going to go with it. But so if oil prices are down because we have lots of supply and demand is not going through the roof, why are we still paying so much for gas?
So when you look at Brent pricing, Brent is still sitting at over 82.5, and I forgot to close this, and I will hang
No
it up
worries.
for now, and then I will take that offline.
Yep.
So one of the bigger issues that we have in general, when you look at Brent pricing, and again, to your point on crack spreads, that's the biggest point, is where are the crack spreads? Where is underlying refining and activity? So let's take the East Coast first when you talk about Pad 1. The problem is in June of 2019, the Philadelphia refiner exploded, taking about 450,000 barrels a day of throughput offline. It was really operating at about 354,000, but that's a sizable footprint to be lost. And that means that we have to rely even more on the international floating market. Now, due to the Jones Act, which means that a vessel has to be flagged, built, and manned by U.S. sailors, built in the U.S., flagged in the U.S., in order to move from port to port in terms of from, like, say, Houston to New York Harbor. And then the Colonial Pipeline 1 and 2 is also a underlying problem because there's only so much capacity that can go on there. So all of these issues, all of these problems create a bottleneck. So then you start looking at, well, what kind of crude are they running? And the problem is we keep getting lighter and lighter on the crude footprint side, which just means that there's about 154 different types of crude grades in the market. 58 of them actively trade. I've, lucky or unluckily, have traded or owned 38 different types all around the world throughout my career based on trading the physical. And it's like every refiner tries to create a blend that's going to make the best product. So even though I talked about how total oil product stockpiles are elevated, gasoline is significantly higher than diesel. So everyone is trying to target the distillate pool, the diesel pool, because that's where you're going to make all your money. The problem is when you make 1 barrel of diesel, you inherently make 2 barrels of gasoline. That's why back when refining started, the Ohio River, back to our conversation about Ohio, caught fire multiple times because they didn't know what to do with the gasoline. They just wanted the distillate. They wanted the diesel, the naphtha, and they would dump the gasoline in the river, which is why the river caught fire on multiple occasions.
Didn't Deep Purple do a song about that?
I think so.
That was, Smoke on the Water. That's what it was.
Exactly.
Yeah.
So when you look at the setup, the focus is, but when you make that diesel, you make pretty subpar grades of gasoline, which you have to enrich to make it hit those levels, those octane readings, which is RON plus MON divided by 2 to get your octane rating. 87, 89, 91, 93. Those are your key numbers. So instead of being able to make a good quality gasoline, they just try to enrich it. That's why there's also that steep spread between where is premium gasoline and where is regular gasoline, because it's costing a lot to get it from point A to point B. Unfortunately, because crude is still at $82, even though we are in some sort of recession, some sort of slowdown, it's going to take time to get us to those points. And that's why, we're going to need to see a bigger slowdown in production, a bigger slowdown in demand in order to see those prices start to normalize in a meaningful way.
Yeah. Let's go back to the big picture, Mark, because you and I have been talking about energy and energy prices for more than a year. And a year ago, both of us were very bullish on the long-term price of oil and energy. You've just given us a bunch of reasons why oil prices are not going through the roof right now. And all of those are hopefully pretty short term, right? Hopefully we don't have a lengthy recession around the world, although it's certainly a possibility given what's happening. But what do you think? Do you still think long-term energy prices are going to be going up? And by energy, in this case, we're talking about oil and natural gas.
So I think it's good to break it down into its parts. And Europe, I'll start with Europe just because the short answer is yes. The long answer is yes. The question is going to be just by how much and how fast. So Europe is in trouble because they're not getting the same level of natural gas from Russia. All of their diesel has to be imported because it's not coming through pipelines the same way. And so the uncertainty around power pricing is going to essentially force companies to leave. And you've already seen it. BASF is shuttering production, shuttering facilities, because when you're looking at a 20-year to 40-year asset, you need to have some sort of comfort that prices are going to stay at a level that makes the most sense to invest. And so when you look at power prices, when you look at diesel prices, industrial prices, it's going to be difficult to continue to operate there. In the US, it's going to be mixed, and it's because of the foolishness around building and operating and permitting new pipelines. But in the South, you're going to be fine. You know, there's a lot of natural gas down there. The crude production is getting a bit lighter, which means there's more natural gas available. We have new LNG capacity coming online. So it's really going to be a story of the haves and have-nots in the US. And unfortunately, you're going to have a lot of tightness in the New England, in the Northeast. You're starting to see it grow in the Midwest. And that's because we haven't been able to build these additional pipelines. Instead, they've been relying more on the lies, or, you know, what they've been told were going to be the efficiencies of wind and solar, which are falling flat. And that's causing them to delay the teardown and decommissioning of coal. So it's all going to be a matter of where. Then you turn to Asia. Now, Asia is a bit, I don't want to say smarter, but they're being a bit more pragmatic on how they're looking at opportunities. You know, there's a lot of ways to make coal cleaner. That's based on the different inventions or just ways to process the stack to make sure that you're not polluting to the same degree. And I think you're starting to see more of that get built out. They are looking to adopt more LNG, but they don't think LNG is going to be priced appropriate to make a broader adoption. So they're filling that void with coal right now, heavy gas oil, heavy distillate. And then when you look at China, you know, those prices are going to continue to go up just because they have mismanaged their coal relationships. When you look at them between Australia, Mongolia has a lot of coal. It's not very good quality coal. And that means that you have a BTU collapse. And that's something that they have to try to address. So realistically, prices are going to go up. So then you turn to diesel. So because diesel is made easier, if you will, from a heavy medium crude blend, that's where you have your highest distillate cut. Now, unfortunately, we are not looking for, nor have we started to continue to drill for and find heavy and medium. Instead, everything has become much lighter, and a lot of that is driven based on shale. Even though the Middle East won't admit to it, there's been a lot of exploration. There is new production that can come from there. Latin America, you look at Guyana, you look at Brazil, that's a very medium sweet blend. So there is some coming in, but when you look at it, diesel's not going away. Diesel demand, it may not rise, but it's by no means going down. It could, in our opinion, it's going to flatline here. But our ability to make that product is diminishing because of our quality of crude. And then I apologize for the long-winded answer, because it also comes into who owns refiners. You know, in the U.S. and between the U.S. and Europe, we've shuttered 3.5 million barrels a day of refining capacity, with another 1.28 million barrels a day of refining capacity slated to close over the next 2 years. Where have they built it? They've built it in the Middle East, and they've built it in China. China has export quotas. So they could easily say, we don't feel like exporting right now. All of a sudden, that means that the Middle East is now your swing production. So to your point on Iran, the Strait of Hormuz, you know, the Red Sea, you know, we've given them the ability to control oil. Now we're going to give them the ability to control the price of refined products, because we're no longer going to be able to make what we need to make in North America, as well as Europe. And that's where you're going to see these prices continue to go up, even though demand may be diminished, but we're just not making the right type of crude, nor do we have the refining capacity to continue to meet the needs of our economy.
Yeah, on the point of diesel, how it's not going away, I am continually amazed at all the people who are advocates for green energy who somehow seem to not understand the amount of diesel required to mine lithium, rare earth elements, right? Everything you need for green energy to get the products that you need to produce green energy requires massive amounts of diesel. And, some of these people say, oh, well, why don't they just use electric vehicles for that? Great. Go work an 8-hour shift with, a high torque, bulldozer, right? Running off of batteries.
Right.
That's
and then
simply not going to happen.
Well, and to your point, so you have the diesel side, and then you have, well, to your point on weight, well, how do you make it lighter? Plastic. Well, how do you make plastic?
Oil.
Well, petrochemicals.
Yeah,
So
exactly.
How do you make petrochemicals? Petroleum in the petrochemical. So that's why liquids. And so one of the things that we've been saying is, like, when you look at, we're sitting here saying oil demand is going up, but it's not black oil demand, it's liquids demand. And that's where liquids demand. And it's funny, to your point on all of these environmentalists are like, we're reducing our need for crude. It's like, you're not. You're actually the biggest driver of the growth over the next decade, 2 decades, because it's all to make the plastics, to make the products you want lighter.
Yeah, and by the way, every time somebody uses the term with me, zero emission vehicle, my immediate, I can't hear that without saying the words at the tailpipe. These are not zero emission vehicles.
Exactly.
Yeah, and for anybody who's thinking of writing in the comments, yeah, but it's still more efficient. Great, but you still need to count the diesel used to mine the lithium to make the 1,000-pound battery, right? It's not basically they're keeping score at the wrong place, right? It's like losing a football game by 30 points and saying, well, we outscored you in the second quarter. Okay, congratulations, but the game is longer than that.
Right.
One of the points you were just making about how in the United States we could have an issue based on pipeline access is, one of the reasons I think having the United States act as a republic is hugely beneficial is there's that old expression of we've got 50 state laboratories, right? We have 50 different states with a certain amount of sovereign power that can make their own policies. And I think what you're saying is, depending on the energy policy of individual states, the cost for people to fill up their car or heat their home or use an air conditioner or just make their lives more comfortable or manageable, depending on where you are. You can't live in Minnesota without heat. These are the kinds of things that will affect people's quality of life. And so we really could see a situation where decisions by individual states on energy policy, pipeline policy, green energy, all of this stuff really could start to differentiate certain states from others. What are your thoughts?
Absolutely. I mean, and if you look at the electrification mandate and the stress that's creating, because as you talked about, mining lithium, well, what about the copper that you need to build the additional charging stations? What about, the plastic coverings and the rubber, coatings and the things that have to go on to all of these pieces to make these policies possible? So then you look at, and selfishly, we're at the private equity level, we're buying hydroelectric dams in these key areas because we're looking at this. It's like, you're not getting your natural gas the way you need it, so now you're relying more on diesel. Diesel's getting more expensive, especially on the East Coast, as you talked about, to heating. The largest consumer of heating oil in the US is New England. But then when you look at the new policies, you're only allowed, like, even though we still call it quote unquote heating oil, it's ULSD, it's ultra low sulfur diesel, it's road diesel that you're burning as heat. So you have this competition. The Philly refiner blew up. We haven't built a new refiner in the US since 1978. And we were making up the difference by importing from Russia. Russia imports are gone. we're on the East Coast, we're at the lowest level of storage in the last 40 years. And now what? So when you talk about, to your point, the policies, that is going to be a huge driver, especially when you look at New England. Now, a fun story. So New York has a policy where they can't build pipelines through New York. New York is the gatekeeper into natural gas into New England. And if New York for some reason instantly got rid of that policy, I challenge anybody to convince me Massachusetts, Massachusetts will allow you to build.
Right. So, the reason Massachusetts hasn't banned it is because nobody's trying to build there right now.
Exactly.
Right. Like, so it's not our fault. Yeah, great. But the minute one end of a pipeline is at the Massachusetts border, right, they're going to pass a law on that.
Exactly.
Yeah.
And that's why.
Go ahead.
Well, and that's why, like, when you look at New England, so the swing production is LNG. So they actually import, but because there's no Jones Act vessel, you have to send the liquid natural gas from Houston to the Isles of Grain in the UK, put it onto a tank, refill an LNG cargo, and then ship it to Boston Harbor. Now, the thing is, every pipeline requires a PSI rating in order to maintain pressure gradients to make sure everything can reach your home. When they know a cold snap is coming in, they have injection points all throughout the pipeline, and they actually truck CNG or LNG, depending on the trucks that they have, from Pennsylvania to injection points throughout the system in order to maintain pressure gradients so that they don't lose what's called the toe of the pipeline, which is, again, just think of your body, the toe being the last piece of it, because everybody along the way took up more natural gas. So when you look at, to your point on manufacturing, when you look at these investments, if I'm concerned that my power or my natural gas availability is going to be turned off, why would I risk that? And then when my father-in-law is a developer and he has seen, when he goes to get a natural gas connection, it's either, look, we can only do so much. You have to install electric heat in these homes because we can't give you the natural gas you need to heat those homes. So now you're increasing your demand on electricity, but yet you're not increasing electrical generation. So what do? The prices go up to pull in and quote unquote import the electricity from PJM, MISO, because there is a certain amount of interconnectivity. So I think you will see this, especially when you look at that nearshoring and onshoring. We've had a lot of battery, battery manufacturing, but it's all moving into the Southeast because there is more natural gas availability. There is more natural gas power generation available. This is where you're seeing the biggest investment, and you're not seeing it to the same degree up north.
Yeah, Mark, we are starting to get some really good questions. So before I actually want to talk to you about both pipelines and uranium. Mm-hmm. But before we move on, let me get to two of our best question askers are pinging in. One question is coming in from David, who's writing in from Europe. And so his question is, now with the whole world expecting a hard recession, which might be the one reason we don't get it, which is an astute observation on his part. He says, I don't want to meaning them, by them he means energy stocks, into a normal stock basket, right? So he's thinking about energy. So his question is, can we say anything about how energy positions will react in a hard recession compared to normal stocks? And in this case, by normal stocks, he means, just normal, regular, anything in the S&P 500 that's not, the 3% that's energy related.
So when you look at energy stocks in general, they're going to perform much better. And it's because of the inherent shortfalls in the system. So even if we get a recession, and I don't believe it'll be a hard recession, my view is that we get that quote unquote soft landing. To me, the shock to the system is going to be, instead of it being an 18-month soft landing, it's going to be a multi-year soft landing. Something that is something similar to the late 70s into the early to mid 80s, because we're so saturated with liquidity that in order to get any type of meaningful growth, it's going to take years to absorb this, to normalize, because the amount of people that said to me, oh, rates at 5%, there's going to be no R&D, there's going to be no manufacturing. It's like, you understand that in the 1990s, if you told someone the 10-year was at 5%, they'd be like, yeah, but
Right, yeah.
that increases interest expense. So when you look at the changing metrics, everybody's over levered, and there's no way to prime the system, if you will, to get us back to growth, because there is no quote unquote buyer of last resort. So you're going to get this prolonged slowdown, which is going to be this back and forth. But we have not been exploring for oil and gas. We have been ignorant in the fact that, and anybody who was even somewhat good at math could tell you that what they're quoting as the optimum efficiency ratings of solar and wind only makes sense in the most perfect positions, which is, the sands of Nevada. And even in the sands of Nevada, they were only achieving 28% efficiencies, which is below the 34% maximum as defined by the Shockley Quasar or SQ law that won the Nobel Prize in the late 60s. So when you look at this, you're going to have this opportunity where they're going to outperform. You're going to see coal outperform, especially on the met coal side. On the thermal, will be a bit more varied. But the interesting piece is, I think, going to be on the utility front as well. And I think the utilities are going to do well because typically they have a set rate of return. And in a high inflationary world, where you're going to have unions, increasing there because it's typically tied to CPI, they're guaranteed a rate of return. And that labor pass through is going to be straight through. When you look at maintaining the lines and the grid, that's a straight through cost. So for them, rates are going to go up. So the consumer is going to get hit on the power side and what they're paying per kilowatt hour, but they're going to make that rate of return. Now, I think at the other ignorant side of things is the amount of electricity that is consumed, or power that is consumed, to make an AI computing chip, to make a server that can do artificial intelligence type computations. So when you look at that, there's going to be a huge power consumption that is going to pull this demand, and it's going to make things better. I like natural gas stocks. I know that sounds scary, because when you look at it, natural gas is at 286. I just think that there's a lot of opportunity on the LNG side and on the natural gas side. Crude is going to bounce around a lot. I do like CVI when you look at like refining. I think they have a good balance. They're in the Midwest, so they have a kind of a captive market. They also have the benefit of CVR, which is which makes a lot of fertilizers. So there's definitely going to be winners in that slowdown. Unfortunately, I think a lot of the losers will be in Europe. You're already starting to see a lot of them pivot away from their green plan, just because it's fallen flat and it's cost a lot of money and it hasn't yielded anything. You look at Ørsted, you look at Siemens, you're seeing the failures. Siemens had to take a manufacturing write down on their wind because their warranties were getting hit 10 months after construction, not 3 years after construction, because you're seeing the failures and the failure rates. And the problem is, these are terminal failures. This isn't like, oh, instead of that wind farm or that wind turbine producing, 90% of baseline, it's literally not working at all. So you're having terminal failure within under a year, and that's where you're seeing additional problems, which is going to be to the benefit of natural gas, which is going to be the benefit to some of the your traditional energy stocks.
All right, moving on, Mark. Ramiro, who is famous in DKI webinars for asking very difficult philosophical questions that are always fascinating, has two of them coming in. These are good ones. His first question, and I'm going to give you both at the same time because they're linked. Sure. His first question is regarding green energy. He's saying fossil fuels needed to produce green energy, which is what we were just talking about. That's industrial consumption. I agree with him. So isn't the opportunity to really get green, isn't that opportunity in being less dependent on fossils and consumer-driven demand, such as cars, stuff like that? So as if I'm reading the question right, he's basically saying, don't we really need to live at a lower consumption level?
Mhm.
right? And here's the interesting thing on it, and I asked you the question, and now I'm gonna give him my answer, and then we'll see what yours is. I actually think Ramiro is right. That basically we're either using carbon-based energy to live a high quality of life, whether it's heating our homes or driving cars. And as we're talking about, green energy requires a huge amount of fossil fuels to produce the implements that would produce the so-called green energy. Again, it depends on where you start keeping score. And I think what Ramiro is saying is, wait a minute, if all this is true, then isn't the only way around that to live at a lower energy consumption level? I actually agree with him. I just don't think anybody wants to do it. I don't think anybody's volunteering. And, the two pieces of proof I would give on that is, one, if you ask people in India, China, Africa, they don't care. They want to live a better life. The other is, it's become hilarious sport to make fun of all the, elites in Davos who take private planes to tell us that we need to, reduce our energy consumption. And, one of my favorite lines of all time is, I'll respond to this stuff when Al Gore gets his carbon footprint below mine. So I think Ramiro is he's asking a philosophical question, but I agree with both his premise and his conclusion. What do you think?
I 100% agree. And I actually gave a talk to an environmental group in Canada, and they legitimately believe, two of them at least, that they should ban cars and everybody should have to travel by bike. And now, mind you, this is in Canada.
Canada.
Think
That's a big
about the
country.
size.
Yeah.
Think about the size of Canada, and they're happy just living a life biking all around their local area without consideration of how you get your goods to the location, to locations.
It's
There
the
is a
second
quality of,
largest country in the world, and the weather is not conducive to biking, something like 11 and a half months a year.
and that's why when you look at quality of life, there would be people would have to accept a different quality of life. And that's why all of a sudden you're starting to see a pivot. And I made this comment when Biden was elected. And I was like, look, he's going to go after the Keystone. He's going to go after oil. I was like, but you watch. Natural gas is going to go from a quote unquote bridge fuel to a fuel. So they had done all this work on demonizing oil, which they succeeded in.
Yeah.
And they were trying to demonize natural gas, but they pulled off that accelerator real fast. And now it's no longer, and you can Google it. They don't call it a bridge fuel anymore. They call it a fuel. And it's small little differences, and that's trying to control the message, control the narrative. And that's where you're seeing some of these pivots. The other thing is, we are ignorant for the most part in the first world nations, but part of the SDGs, or the Sustainable Development Goals, and to the UN's credit, which I know it's hard to say that you can give them credit anywhere, but the pivot away from pure ESG to Sustainable Development Goals that are much broader and have 17 of them actually makes more sense, because one of their key goals, and I just pulled it up for it, is reduced inequalities. And that is important because people in Africa, people in Southeast Asia, they want what we take for granted.
Oh, yeah.
And we're going to take that away from them. Like, we can give them the newest and best in technology. And that's why I think LNG is going to be a huge piece, because there was a lot of stranded gas off the coast of Africa, not enough to create an LNG export behemoth, but to source it, bottle it, and then ship it within the local region. And I think as LNG gets more modular, as processing of gas gets modular, cheaper, faster, that's when you're going to see, I think, a big step up. And in my opinion, we have to embrace natural gas, not demonize it. And if you look, and they, it's something that they didn't make a big stink about, because why would they? It shows that their math was wrong. They reduced the impact methane has in the atmosphere. And let's be fair, they don't really know. We're so young in understanding atmospheric math, where if you're off by one millionth of a percent, but within 10 years, you're essentially, your whole model's blown apart. So when you look at methane, they're starting to make it less demonized. And it's interesting because I'm going to be speaking at COP 28 on several panels, and it's moved away from replacing fossil fuels. And now the new term is decarbonizing fossil fuels or decarbonizing energy, because it's like we have this installed infrastructure, which took hundreds of years to build, trillions of dollars of investment, and we're just going to throw it to the side. No, let's take it. Let's repurpose it, as we did from whale blubber to coal to diesel. Well, let's create the next thing. How do we make diesel cleaner? And I think that's where you're starting to see a much better pivot and a more constructive conversation than just get rid of it all and we're going to have goal-oriented economics.
Yeah. So by the way, Ramiro has your Canadian solution. He thinks the biking was a good option, but really you should go with cross-country skiing. That'll fix it.
Yes.
Oh God. All right. So Ramiro's second question, I want to get to this now because it gets to the thing that I really want to talk about with you today. So Ramiro's question number 2, it's an excellent question. He says, with the risk of sounding naive, by the way, Mark, if I've seen a dozen of his questions on half a dozen webinars, he's never naive. That's just talk there. He's not naive. He says, if green energy is not making a dent, as shown by the expected increase in fossil fuel prices, okay, he's right on that. Is there a path to a less carbon dependent world? What would it take to get that flywheel spinning? You want to say it with me? Nuclear.
So short answer, yes. Long answer, yes. The problem is, can you? So people when I pitch my hydroelectric dams and whatnot, they're like, well, what happens if nuclear comes in? It's like, look, if the U.S. government said to me, Mark, we are going to build an SMR that's going to be fully operational in under 5 years, I will be the first check writer to that facility. It's just going to be permitting. It's going to be time. And that's where there's a huge opportunity. And I think and to be fair, I have friends in the government. They are on the Democratic side. There is a embrace that is coming. And it's interesting because when you look at COP28, the nuclear conversation is increasing. And now you actually have the U.S. incentivizing U.S. companies to go out and bid for new SMRs, new nuclear plants, which, and for those that don't, SMRs are small modular reactors.
Good.
So when you look at this, you're actually starting to see a bigger increase. And to your point on solar and wind, people are starting to get the joke, because one of the things, and I won't go through the whole story. If you want, I can at a later date. I've seen the failures, because when I was in Masdar City working for GE Capital with Mudabla, I saw the failure I shouldn't say the failure, the limitations of solar. Solar on your house is great. It's fine. You're up above the clay band. You'll generate a small amount of power. That's fantastic. On a massive scale, they do not work to the level that people are expecting. And for everyone that just says, oh, well, batteries are going to fill the need, it's not. We can go through all the different math and the physics behind batteries and current battery technology and what's currently in the works. There is a failure, and that's why I've been pitching this nonstop. It's a basket approach. Does solar work perfectly in Florida because of their sandy soils and solar exposure? Yes. Nevada, yes. Texas, no. Texas has the most clay, which is why Harvey was so damaging on a hurricane level. You have to take into account your environmental footprint. What does the geography give you? What does the topography give you? If I can use coal in Minnesota and then offset it with power generated in the sands of Nevada with solar, great. Let's balance it. It has to be a balanced approach in order to get serious about decarbonizing. And let's be fair, if I incentivize every single small stranded gas asset and I turned it into an operating CNG LNG capacity, I would shut down 90% of coal consumption and heavy distillate, heavy diesel, heavy fuel oil consumption around the world. you're going to tell me that's not going to have a much bigger impact than trying to get me from selling my car, which I drive like I drive like your typical BMW driver, and I still get 23 miles to the gallon. So you're going to tell me that me going from that to something that is going to, plug in and I'm going to get 200 miles, range? Or am I going to go into an industrial facility? I'm going to shut down that coal, but not just shut it down. I'm going to convert it to natural gas, make it cleaner, more efficient, better O&M, cost basis. The local region, Pakistan, India, I mean, all of these areas would benefit from that. But instead we sit here and we play with these tinker toys instead of getting serious about how do we actually make an impact into the carbon footprint that we all have around the world.
Yeah, we've gone from policy and action to narrative. Just before we got on this call, I saw on Twitter, Tracy Shy Girl was tweeting about in Canada, they just permitted more uranium production and saying, hey, this could be online in the next decade. What are your thoughts? What are your thoughts on the price of uranium? Because I've been hugely bullish on uranium. We are in a huge deficit situation right now. We're using a lot more uranium on a yearly basis than is being mined. So inventories are being taken down every year. And that's not even counting the fact that you have a whole bunch of nuclear plants being constructed right now. And what is the front loading is something like 3 years of fuel supply for that. So,
yep.
So basically, just on an operating perspective, we are in a huge deficit situation right now. Once you start adding new plants, that's triple, in that first year just to get them started. And then, we just saw today that Canada is saying, yeah, we're going to allow mining for uranium and try to address this deficit. Does it matter? Is the uranium story over? What are your thoughts on this?
The uranium story is just getting started. And the reason why I say that is because there was a huge assumption that, EDF or France was going to turn off all of their nuke. And then not so quietly, the Macron said, oh, no, nuclear is green now. And so they're like, oh, in all of these nuclear facilities, you have to increase their life expectancy for, 15 years. And then EDF sat there and said, well, you told me for the last 10 years that I was going to have to decommission these. I was not doing maintenance to prolong life. I was just doing maintenance to make sure that they were operational with the target date of decommissioning that elapsed over a year and a half ago. So now you have nuclear facilities that were supposed to be coming offline now reinvigorated, and a lot of uranium comes from Russia. Where is uranium not going to come from? Russia. So when you look at not only just a extension of life for a significant amount of nuclear capacity, plus the increase of nuclear reactors that are going to be operational over the next decade, plus good luck trying to get Russia to not only just produce, but also ship out, it's going to be a big issue. Now, I want to touch on Russia for a second because, I have friends in Russia. Again, being in energy, as long as I have, you tend to always have friends in Russia. They've said there's a diesel shortage. And I don't think people appreciate what that means because obviously a mechanical military requires a significant amount of diesel, but also all of the technology on refining exists in the West. So when you look at Russia, Russia's struggling because they can't get catalysts. They can't get new equipment to do these turnarounds. So they're struggling to take their crude and turn it into a refined product. As we said before, it takes diesel to mine. It takes diesel to create a lot of these operations and maintain these operations, which is being siphoned to the front lines, as well as the slowdown in underlying refining capacity, which comes back to the issues within OPEC. Saudi Arabia is annoyed that Russia's cheating, and it's like, well, they have to cheat because they have to get this crude out, because they also don't want to turn off their oil wells because they're not sure they can bring them back online, especially in the middle of winter. So you have this constant battle that is occurring in OPEC. But back to the nuclear story, the nuclear, if we increase nuclear consumption in terms of just power and power generation, whether it's a small modular or some micro reactor, that enables us to then go out and not rely as much on the OPEC nations and be at the whims of how MBS feels that day, or how China is going to position their export quotas.
Just out of curiosity, are you trying to ensure that neither one of us is allowed to travel to a wide variety of countries? Yeah, are you trying to get the two of us banned? My passport's going to get suspended in half the world just for talking to you. So I know the news is new on the new potential Canadian uranium production. So feel free to say, hey, listen, we haven't had time to really investigate it yet. So I agree with you. There's just too much demand for nuclear coming on. There's not enough for the plants that we have. You have new plants coming on. So I'm bullish on uranium for that reason. Can this new Canadian permit mine operation get enough supply on the market soon enough to stop that from happening, or will it be too little too late, and by the time they get it on, uranium prices will have already gone through the roof? And again, this news just came out, so please feel free to just say, yeah, ask me that in a month.
I think a lot of times we don't appreciate the ingenuity of some of these engineers and the way they operate plants. And a lot of the policies are created to make sure that you're not stressing equipment. But I think that there's going to be ways that they can extend some of the useful life of what they have. They'll run tight. I'm not saying that they're not going to have to work through some of their fuel at the same degree. But I think that there's going to be ways to optimize that will extend the life. And again, it's gonna push uranium prices higher. That's a foregone conclusion, in my opinion. But I think that's a long way of saying they will be online on time, so that we're not going to see nuclear facilities cutting run rates. So say if a facility has 4 reactors, it's not going to be to the point where, they're running one until Canada comes on. I think they're going to be able to maintain their operations better than I think even they expect.
All right. So we're starting to get to the end of the time we've got allotted here. I'm going to go back to Ramiro for the last question, because it's a good question. He wants to know, how should we as investors think about leveraging or hedging against this particular energy environment? What do you do to protect yourself?
It's a great question. And the way that I would hedge against it is, looking at, depending on how you invest and the options that you have, I would be long gas. I'd be short some of the European majors. I think you can be long some of the U.S. majors. I think Chevron, not so much Chevron. I think Exxon has done a great job of positioning themselves, especially with Guyana, with Brazil. I think they're very well positioned, particularly in Guyana. Plus, with their I just forgot the name of it offhand, but with their LNG facility coming online with Qatar, I think they're in a good position. I think at the same time you could pick your spots on some of the refiners. I'd want to be long the refiners that are diesel heavy, because they're going to have pricing power versus the guys that are more gasoline. And the way that is by what's called the Nelson complexity. The less complex, typically you're doing hydroskimming, you're doing lighter crudes, you're focusing a bit more on the gasoline cut, and you would want to focus a bit more on the distillate cut. And then I think you want to have I don't want to say healthy, but a good basket of operators. Like EPD is one of my favorites, because I think there's an underestimation, or at least not an appreciation, for liquids growth. And I think you want to be long essentially Mont Belvieu, which is quarter owned by ONEOK, Targa, and Enterprise. Enterprise happens to be my favorite because they have the largest, or I should say the most amount of export capacity. Energy Transfer is good. But you have to make sure you know what Kelsey's going to do. And I don't think Kelsey knows what Kelsey's going to do, but you have to make sure you're aligned with him. They brought on new ethane export capacity. And when you look at ethane crackers on a petrochemical side, if you build an ethane cracker, you have to maintain at least 87% of ethane moving into that system because it's inefficient. So you have to cycle it back several times to make sure your ethane turns into ethylene. So because of that, with the amount of ethane that's been built in ethylene crackers that have been built in the U.S., the Middle East, and Asia, you're going to have a very healthy ethane crack. So I'd say ET is another one that is a stronger point. And then some of the smaller guys, I think the oil field service guys are always going to struggle. They're essentially commoditized. You're seeing what I call the manufacturing mode, where guys are just getting into a hit and repeat structure, and that's going to eat into some of those margins as they face labor problems as well as equipment problems that have to be replaced.
All right, Mark Rossano of C6 Capital. Fascinating as always, opinionated as always. Love talking to you. Before we let you go, Mark, for people who are interested in you, what you're doing, and actually, I'm going to interrupt myself on this. Mark is doing some fantastic work in private green energy investments. He's doing amazing work on the hydroelectric side, on the fertilizer side of the business. These are all things that are worth looking into and talking to him about. Mark, for people who are interested in you, in C6, in the private energy and fertilizer investments you're working on, how do they find you?
Sure. You can find me on Twitter at MarkFNY, or you can just reach me by email, mrossano@c6capitalholdings.com.
All right. Terrific. Mark, thank you so much. Great speaking with you, and thanks for your time and for doing this with us today.
Always a pleasure, my friend. Thank you for having me.
All right. We'll talk to you soon. And everyone, thank you so much. Ramiro and David, thanks for the fantastic questions. And we're a wrap. Looking forward to the next one. Thanks, everyone.